And the other thing about those Japanese financial institutions being primary dealers to the New York Fed is that they participate as well in the Treasury auctions. And you can bet that a lot of the demand for U.S. Treasuries is coming from the Japanese institutions, and it keeps Treasuries going. So unfortunately, Japan is like the U.S.'s bitch, if you want to call it that. I don't like using that word, but that's all it is. Thursday, April 25th, 2024, Maneko 64, home of alternative economics and contrarian views. We're going to look at the Bank of Japan today and the Japanese yen, and how the Bank of Japan is sacrificing its own currency right now in order to keep the whole world financial system going. And they're doing that through something you probably heard about already, or you heard mentioned, the Japanese yen carry trade. I will try to explain it to you as best as I can. And I just want to say I've been warning about this, and the fact that the Japanese were going to be there helping support the Fed through thick and thin, but I don't think it's something that can last forever. I even have a playlist about the Japanese yen carry trade, which I've been warning about for years, and I'm going to put this video there too on that playlist, and you can go back to the playlist to refer to my older videos. Before we look a little deeper into the Japanese yen and the Bank of Japan, I just wanted to let you know that we still have a special with Dirty Man Safe, one of our affiliates. Dirty Man Safe is a great way to keep some of your treasures or valuable assets hidden. You can dig it anywhere you want. And yes, it has a patent pending. And if you want to find out more about the Dirty Man Safe, there's a link below in the description of this video. If you use my promo code Maneko10, you will not only get a 10% discount, but you're going to get some kind of small gift as well from the people at Dirty Man Safe. And they ship it to the UK as well. I think it doesn't hurt to have something like that in this day and age of political chaos, the dissolution, so to speak, of law and order as well, not just in the US, but here in the UK. So back to the yen carry trade, because basically that's the mechanism used to keep the dollar, to keep the Western financial system going. And why the Bank of Japan? Well, because Japan is one of the biggest economies in the world. It has a deep financial market. It has a deep savings culture. The Japanese are one of the biggest savers. And the Japanese economy, despite everything, is still a very strong economy. It's an export-driven economy. So the Japanese yen carry trade, I think we need to go to the foreign exchange market to first explain that, what it really is. So the foreign exchange market, there is no exchange where people trade currencies. It's done over the counter. That's the first thing. And basically, there are a few kinds of transactions. There's a spot foreign exchange transaction, which is usually done for delivery in 2 days of the currency that you buy. The seller of the currency delivers you the currency. You deliver the currency that you sell to the buyer. That's how it works. But there's also forward transactions, which are for more than spot. It could be 1 week, it could be 2 weeks, it could be a month, 3 months, 6 months. And usually, for example, let's take the dollar yen transaction. If I'm the Bank of Japan or a Japanese fund manager or life insurance company, and I've got a lot of yen, what I can do is sell the yen and buy the dollar. The other thing that can be done, though, is for investors and speculators in other parts of the world who have access to the foreign exchange market, seeing that Japanese short-term rates have been at negative for decades. Yes, they're back to zero right now, but what you can do is when you sell the yen, you're actually borrowing yen, right? And you're borrowing it for zero. Up until recently, you're getting paid to borrow it. And when you do that, when you sell the yen, can be for a month, 3 months, 6 months, or whatever, you're going to get the other currency from the other side. You're going to get dollars, for example. And dollars, of course, we know are yielding more than 5%. So it seems like a really great deal. There's only one problem with shorting the yen to take delivery of dollars or pounds or euros, is that the yen could, in the meantime, while you're borrowing it and then having to pay it back later, the yen appreciates. So the cost of your loan goes up in yen terms versus the asset that or the currency. So for the yen carry trade to function and to keep dollar assets, euro assets, pound assets, or Aussie dollar assets strong, the yen has to stay weak. That's part of the yen carry trade. I don't know if you remember some years ago, there were a lot of Eastern European savers, like in Czech, I think, or Poland, that were borrowing in Swiss francs because the Swiss franc rates were negative or zero. But then there's a problem that the Swiss National Bank lost its peg against the euro, and the Swiss franc went through the roof, and loads of people got in trouble in those Eastern European countries. So you can think of a strengthening yen being a big trouble for this carry trade. And what this carry trade does for treasuries or gilts or European government bonds is that it provides liquidity and demand for those bonds, because the 10-year JGB yield is still only yielding like 0.8 or 0.9%. And even the Japanese investors or savers, they'll go abroad because if their currency is weakening and they're getting more return with other currencies that are strengthening, it's a win-win situation. And how does the Bank of Japan keep this situation going? Well, by keeping rates at zero, by still doing QE, as you can see here by this chart from Yardeni. They're doing about $40 billion worth of QE a month, still the BOJ. They're not tightening at all. And 40 billion for Japan a month is the equivalent of about $250 billion QE for the Fed. Of course, the Fed and ECB and BOE are doing QT, but I would say that what the BOJ is doing is overwhelming that policy stance from the other central banks, and it's what is keeping the system running. So what could be the danger to that? Well, the danger could be that politically the BOJ gets in trouble because the yen weakens and weakens. Of course, a weaker yen will continue to help Japanese exporters, but there's going to come a point And some of you who are in Japan that I know that watch this channel can tell me. I think this is hurting the people on fixed income in Japan, which is a big proportion of the Japanese population. It's hurting the average Japanese. And why is that? Well, because they're paying a lot more for imports than they really should. Even though the Bank of Japan has this crazy mentality, this crazy desire to keep CPI, which is what they call inflation, above 2%. I think right now it's somewhere between 2 and 4. And they're scared that it's going to go negative, but a negative CPI would be good because the Japanese public would be paying less for things. So that's the problem there, that the BOJ gets under pressure, that the yen accelerates lower. And right now, as you can see here by this long-term chart, the reason I bought the long-term chart is to show to you that the dollar is very strong versus the yen, but it's all relative, because back in the early 80s, the dollar was a lot stronger. It was above 200 yen. Right now it's at 155. The Bank of Japan has threatened to intervene, but I think intervention is not the way forward. The way forward is for the Bank of Japan to really accelerate their rate hikes. They were at minus 0.1 and they went to 0. That's not enough, Bank of Japan. They need to go to 1, 2, 3, but they won't do that, of course, because Japan is up to here in debt. They need to stop the QE, but they won't do that. So the way I see it, the Japanese currency is going to continue to flounder, to sink, especially versus gold, as you can see here. It's up 6 times since the low of 2008. Yes, we're approaching 400,000 yen. We're at 361. And in a way, the yen is leading the way for the other fiat currencies, because the other central banks, they're going to have to loosen again, just like the BOJ. So yeah, right now, the BOJ is keeping things alive. And the thing to watch is the Japanese yen. If we see the Japanese yen strengthen or the dollar drop, for example, right now we're at around 155. If you see that dropping towards like 150, 145, 140, and really accelerating, that's bad for the whole financial system, world financial system. So the other thing this yen carry trade does is it keeps a demand for treasuries strong, for gilts, for European government bonds artificially strong, because Japanese investors and other investors exploiting this cheap yen and cheap borrowing rates, they will sell the yen, which means that they're borrowing in yen, but they're getting another currency to buy other securities. And that's done through the world's financial system. You can see that, the primary dealers of the New York Fed, there's 3 Japanese institutions there. Daiwa Capital Markets, you've got Mizuho Securities, you've got Nomura Securities. And these Japanese institutions, they're everywhere. They're not just in New York. They're in London, in Paris, in Frankfurt. And they're exploiting this and keeping the whole scheme going. So the Japanese yen is keeping the John Exter's inverted pyramid alive for now. But I think it's very fickle, and we need to keep an eye on the Japanese yen. That's how important it is for the world's financial system. So with that, let's quickly look at where the markets are this morning. It's 8:36 a.m. London time. We've got spot gold at 23.22. It's up about $6. The high's been right around here, around 23.24. The low's been 23.04. Silver's up about 18 cents or 0.2% at 27.33. High's been 36 and the low's been 26.96. Dow futures is down 73. NASDAQ is down 200. I think we had some news from Meta yesterday, earnings. They were good, but they said something about having to spend more on AI, and their stock actually fell like 10% in the aftermarket. The S&P is down 30 at 5,040. To the currencies, sterling is up 0.25%, just below 125. The euro is up 0.2 at 107.16. The dollar is up 0.2% versus the yen at 155.62. And the dollar is unchanged versus the yuan at 726. What about the commodities? Well, we've got WTI crude. That's up 1/10 at 82.80. Brent is up 1/10 at 87.23. High-grade copper is up 1% at 453. What about cocoa? What's cocoa doing? Well, cocoa is still very strong. It was up over 5% yesterday at $11,303 per metric ton. I think we had a little bit of a correction in the last few days, but it's come right back up, cocoa. What about the bond markets? Well, the 10-year yield is unchanged. It's been stuck around 465 for the last few days, so pretty steady there. And the 2-year note yield is at 494. And the other thing about those Japanese financial institutions being primary dealers to the New York Fed is that they participate as well in the treasury auctions. And you can bet that a lot of the demand for U.S. treasuries is coming from the Japanese institutions, and it keeps treasuries going. So unfortunately, Japan is like the U.S.'s bitch, if you want to call it that. I don't like using that word, but that's all it is. Japan is not a sovereign nation. It's doing the bidding for Uncle Sam still. Whether they get some cojones and say, no, we're going to raise rates, we don't want our currency to collapse, is another question. I don't think they will. They're quite subservient for now. So with that, I'm going to wish you all a very good day. Take care. Bye.